Good afternoon and welcome to HYCM's FX Week Ahead live market analysis with myself, Giles Coughlin. A special welcome to you if you've just joined this webinar for the first time, and particularly if you've joined us from the Dubai intensive FX trading course that we ran last week. So a special welcome for you if this is your first time, and welcome again to the regulars. Hi Sammy, good to have seen you last week, good to have you back on here. Hi Van, Nadir, yeah, good to see you guys. Ilkom, that's lovely. I hope you're all doing well, and we're going to be looking at the key events that are coming up for this week, and we're going to look at one key event that's been really influencing the market last week. So we've got plenty to look at this week, and it's an action-packed week with plenty of potential volatility for the FX markets. And the more volatility that we get, the more opportunity that there potentially is for us as traders. Just to make it clear that as I go through different scenarios, just to make it clear that the whole purpose of the webinar today and the webinar on Tuesday is all about education. So the idea is that you get, as it were, looking over my shoulder to see what I'm looking at in order to help identify for yourself what key market events you'll be looking for, and over time you begin to see what the market is focusing on and why it's focused on, and you begin to be able to make your own trading decisions, which is really key for a trader, is that you need to be able to have conviction in your decision-making process, and that conviction only really comes with time and confidence. So the idea of these workshops and webinars on a Monday and a Tuesday is you build up your confidence and your skill until eventually you don't need someone like me because you already know what you're looking for. So that's the whole idea of these webinars and the workshops that we'll be doing today. So without further ado, let's look back before we look forward. And the big thing to look back at to last week was the Federal Reserve cutting their interest rate outlook. Now, going into the meeting, we were covering this on the intensive course I was taking in Dubai, and I was flagging how key this Federal Reserve rate meeting was last week. It was last Wednesday, and the market had begun to pricing a dovish shift from the Federal Reserve, saying that perhaps the Federal Reserve was going to start pedaling back expectations of being patient on interest rate movements, and they changed that patient language. So we're just going to go through some of the Federal Reserve rate statement because it was so important. Fed's Bullard, he dissented from keeping rates put. Rates weren't changed. Bullard dissented and said, I think we should cut now. The median dot plot is for no change in 2019, but nearly half of the board see lower rates. So let me just show you that. Here, this is the dot plot. And the idea of the dot plot is that the FOMC members, they put a dot where they expect appropriate policy to be at a certain time. So you can see here's 2019, and you can see that these dots reflect where the majority of people think that the rates should be. Okay, so you know, most people were thinking 2.5, but most people in 2019 saw a cut, you know, rates to and below 2%. 2020, here's the forecast. 2021, there's the forecast, and the longer run. And the idea of these dot plots is it's meant to be communicating to the market the future outlook of the Federal Reserve. Now, with the last meeting, that dot plot has been made less optimistic. So after the prior meeting, Jerome Powell was saying there were signs of progress on trade and global growth, but in the week since, the cross currents have re-emerged. The apparent progress on trade turned to greater uncertainty. Now, that was all about Trump and Z. There seemed to be, after the last meeting, signs that that US-China trade war was going to be sort of sorted out. However, then it flared up again. So that's what they're mentioning. Risk sentiment in financial markets has deteriorated, and many on the FOMC see better case for more accommodation. Okay, so there's reasons for lower rates. So when the rate statement has been digested, and this is just a little point to make it clear to you, is read the rate statement yourself. Here is the rate statement from the Federal Reserve. It doesn't take long to read, but if you get into the habit of reading it yourself, you will be able to see key economic indicators which the Federal Reserve is focusing on. So just have a look here, reading the top with me. Information received since the Federal Open Market Committee met in May indicates that the labour market remains strong and that economic activity is rising at a moderate rate. Job gains have been solid on average in recent months, and the unemployment rate has remained low. Okay, so already you can see that the Federal Reserve has a strong labour market. Okay, so a strong labour market and strong job gains are important to the Federal Reserve. So this tells you that if you get a weak labour market, weak job gains, higher unemployment, that's going to be very negative for the US dollar, because the Federal Reserve is seeing that as a bright spot in the economy. Similarly, look, on a 12-month basis, overall inflation and inflation for items other than food and energy are running below 2%. So they're saying that this inflation is a concern of the Federal Reserve. Okay, and he talks about at the end, look, in determining the timing and size of future adjustments to the target range of the federal funds rate, the committee will assess realised and expected economic conditions relative to its maximum employment objective and its symmetric 2% inflation objective. This assessment will take into account a wide range of information, including labour market conditions, inflation pressures, and inflation expectations, and readings on financial and international developments. So in other words, you can see its labour market and inflation are very important to the Federal Reserve. And that's a clue. And you really only get those clues by reading the rate statement yourself to see what the Federal Reserve is focused on. And one of the key things in the financial markets is you need to see what the central bank is focused on, because when you see what the central bank is focused on, you will see the data points that will have a greater impact on the currency. So here the Federal Reserve told us inflation and labour data. That's very important for the US Federal Reserve. And if we get softer data, we know that the US dollar is going to be sold. If we get stronger data, we know the US dollar is going to be bought. So that's kind of a clue, a hint, as it were, that the Federal Reserve has given us. So that's just one key foundational principle. We were covering this a lot last week. So make sure that you keep practicing those skills. If you learned them for the first time last week, or if you've been practicing them for some time and just needed a refresher, this is a really good refresher for us. And the bottom line now is that the Federal Reserve has cut their interest rate outlook. It was such a key moment on Wednesday, and there was one chart which I flagged up at the time. So this is certainly not me calling anything after the event. I'll show you the chart. I'm just going to take a quick screenshot from TradeView because it's a nice clear chart, and I prefer it to the MT4 terminal. Okay, here you got the TradeView, and this was last week. Last week there was what seemed to be like a very good technical rejection of the 1350 level on gold. We saw a bearish pin bar reversal of a double top. So that, to all intents and purposes, looked like a double top. And there was once upon a time when, when I was learning to trade, I learned to trade from a technical perspective only. And this was this would be a key, obvious trade to have taken for me. You would have taken a sell from a double top, looking to, take profit down here somewhere, this kind of region. But I knew, and I was explaining to the course participants, that actually gold's path would be determined not by the technicals but by the fundamentals, because the Federal Reserve is about to meet, and if there was a dovish tilt, there would be a breakout in gold, and that's exactly what happened on Wednesday. There was a dovish tilt, gold broke out, and I took 3 positions long gold and took profit on all 3 of those positions on that spike, on that reaction, and that was just a very textbook fundamental trade to take, and very obvious from before the event, not a complicated trade. And you can see gold is still being bid now on this dovish tilt from the FOMC, and on the weekly chart as well. I'll just show you on the weekly chart. Technically, we've got a nice break of an overhead, of key overhead resistance. So let me just show you that. I'm just making here, this is one chart to be looking at very interestingly, because if we get this continued situation, then gold looks like to appreciate more. So you can see we've got the weekly candle. This is a clue, you know, when price breaks and closes above a level, it's a clue. So we've got this break, close, and breaking of the overhead resistance. Now, technically, buys look attractive from this region and from that region. Okay, these two levels look attractive for buying from support, and the fundamentals are very good at the moment for gold because of the weakness in the US dollar. Now, will that carry on? That's partly what we're looking at during this week. Okay, so whether those conditions will carry on are a question mark. But if they do carry on, this present condition that we're in, then gold looks like an excellent buying opportunity. Again, this is not an invitation to trade. It's not trading advice. It's simply showing you what I'm looking at. So I've traded this spike, and I'm looking for a potential to rejoin depending on what happens this week. And we'll be going through that, and I'll let you know what I'm looking for. So we got that dovish tilt from the Fed, and the question now from the Federal Reserve is, will they cut more than 25 basis points? So the expectation now is for a 25 basis points cut in July is being priced into the market by nearly 100%. We've seen a lot of US dollar being sold. However, there was some question marks by Jerome Powell, who indicated that there is some research done that, you know, a half percentage point, a 50 basis points, can be more helpful to stimulating the economy rather than just doing it at 25 basis point. There is some research he's been reading which suggests a 50 basis point cut has more benefit and can actually, you know, as it were, address an issue early so that it doesn't get out of control. So the market listened to that, and the question now is, will Jerome Powell cut by 25 or 50 basis points come July rate meeting? So that was the real big news from last week. It's really had a big impact. We saw stocks up, treasury yields down, US dollar sold, and gold up. Now, the thing to remember, gold is gaining its interest again. The problem with gold as a general rule is you don't get a yield from it. You know, you don't get a dividend. With a bond, you obviously get a coupon return, so you get something for holding the bond. With equities, you obviously get dividends from holding shares. With gold, you don't get anything other than the commodity itself. So if there's yield elsewhere, people will go for it. But gold only really becomes attractive when there isn't so much yield around. And if interest rates are going to be going down, then all of a sudden you can see that gold's value, as it were, will increase in people's eyes. So that's something to be looking at. Trump Z meetings on again, due this week at the G20. Going to be a big meeting. Again, I've explained China and the US, between the two of them, make up 40% of the world's GDP. So if China and the US aren't happy with each other, literally the whole world suffers. So that is the big concern, that the US and China trade deal is done. If that doesn't get done, then there's going to be more worries about global growth and global expansion. So that's what that key issue is between US and China. Looking at the week ahead, let's zoom forward and see what we've got. Now, we've got a lot of things coming up this meeting. Now, the key issue here for Tuesday, there's one event I want to point out to you, and it's this event. It's the Federal Reserve's Chair, Jerome Powell, speaking. Now, he's speaking at a Council on Foreign Relations in New York at 5 o'clock GMT tomorrow. And the topic of his speech is economic outlook and monetary policy. So that is a very relevant title to the Federal Reserve's dovish tilt from last week. So he may well be mentioning something about monetary policy out of the US. And remember, as I've taught you guys a number of times, is when you have a rate decision made or a rate meeting, you always want to look after the event to see, is the central bank's governor speaking immediately after or a couple of days after, because this gives the central banker a opportunity to address any kind of mistakes that it feels the market has made. So, for example, Jerome Powell could say, if he wanted to, oh, I noticed there was a lot of selling that took place, and we're much more optimistic than the market is pricing in. He can give hints towards that kind of leaning. Obviously, he doesn't say it as explicitly as that, but you soon learn to read between the lines and the language. So that's Jerome Powell. The full text will be released on the dot with a question and answer session. That event is going to be covered over at forexlive.com. So that will be covered, okay, and that is coming out 5 o'clock GMT tomorrow. So it's like, I think it's about 8 o'clock or 9 o'clock Dubai time for those of you guys who are in Dubai. Now, that's Tuesday. Now, Wednesday, this is going to be a very interesting meeting. It's the official cash rate of the Reserve Bank of New Zealand. Now, what you're going to get the cash rate and the rate statement. Now, the Reserve Bank of New Zealand, if you just go back here, you see they have cut their rates early. They kind of have beaten the Federal Reserve in cutting interest rates, and they cut interest rates before the Reserve Bank of Australia. So there's this general dovish tilt that's happening across the world's central banks. And the Reserve Bank of New Zealand have their rate meeting. Now, it's expected for them to stay put at 1.50%, okay? And in May, the RBNZ, they forecast to hold rates this time around. And the recent data out of New Zealand has been more or less in line with the forecasts. The economy's been growing. It's a reasonable, something like a 0.6% quarter-on-quarter rate in the first quarter. But there is weaknesses in household consumption, and there's low business confidence. And my sort of flag here is there's a possibility you could see the RBNZ cut interest rates. Now, obviously, if interest rates were cut, you see a very fast and hard sell-off on the New Zealand dollar. So that would be a high conviction trade, a high conviction short, if the RBNZ cut cash rates. I think there's a possibility they could. We've seen a dovish tilt from the Federal Reserve. It wouldn't surprise me to see a surprise rate cut here. Something to look at, something to look for, because that's the sort of opportunities that you really want as a currency trader. Those really high conviction currency trades, when you have a central bank cut an interest rate, that unexpectedly, the currency is going to fall. Okay, so that's a real one to have. Don't miss that event. Have that, and if you come to the event afterwards and a cut interest rate, you can know that your weak currency for that day will be the New Zealand dollar. And again, the rate statement can be viewed as well, because they could flag a rate cut coming up, and then in the next rate meeting after this, and they could, give some hints, a different rate path. So again, look at the cash rate, read the rate statement, and then tune in to those key aspects of what's going on. Okay, US dollar core durable goods orders. All the US data throughout this whole week is going to be viewed under the kind of lens of, has the Federal Reserve been right to have a dovish tilt? If the series of US data comes in strong, it's going to question that analysis. If it's weak, it's going to confirm it. The one big event is at the end of the week for the US dollar, and I'll cover that. But just remember, these collective US dollar data points are going to be viewed through that general lens. Business confidence, again, this is another potential opportunity for the RBNZ. Business confidence is an indicator that's looked at by the RBNZ. Obviously, the less confidence business has, the more likely a rate cut. Now, look at the rate statement, the official cash rate, and then look at the business confidence the next day, because that's likely to prompt another reaction. So again, the reaction will be if that business confidence contradicts what's said in the rate statement. So if they say for example, they say, okay, we're going to cut interest rates at the next meeting, depending on how much business confidence we have, then if the business confidence suddenly comes in really strong, in expansion territory, plus, plus 20, plus 30, you're going to see a lot of New Zealand dollar strength. So you've got to read these, this business confidence will be important data, but only insofar as it deviates from the rate statement and the official cash rate scenario. That's something to look at. US dollar final GDP data, covered that with the the core durable goods orders coming out of the US. So you want to hold those in that key area. Now let's move on to Friday, the last day. Obviously, we've got G20 meetings taking place. So these G20 meetings are going to be going on during this week. We're looking for headlines, particularly Trump and Z. So if Trump and Z manage to get a trade deal, then we're going to see a renewed confidence come into the market, you see. And this is why I'm not automatically bullish on gold straight away, because I want to see what happens with Trump and Z. Oh, hi, Salman. Yeah, you should be able to get a copy of the presentation. Just email your account manager, and they should be able to send a copy of the presentation over to you. I don't see that being a problem, Salman, so just copy them in. But as I was saying, the reason I'm not automatically bullish on gold is because I want to see what happens between Trump and Z. Okay, if Trump and Z really make a great deal together, and then all of a sudden we might see some US dollar strength because there might be optimism that feared slowdown and the cross geopolitical currents that Jerome Powell mentioned doesn't come to pass. So you can see that if there's a really good Trump Z deal done, then we might see some US dollar strength. So that's why I'm not just jumping into gold, because of this event that's taking place between Trump and Z on the G20. So we just have to wait for that. Yeah, you're welcome, Salman, no problem. We got the current account data of GDP, nothing that I'm particularly expecting for that. But obviously, we're going through these different data points. Now, if these data points vary massively from what's expected, they can suddenly grow in prominence. So what you're doing when you look ahead, you're looking for the events that you see to be most likely relevant. And you're normally correct, you'll normally be correct, but every now and then there'll be a data point that comes out that is completely unexpected but changes the status quo. So be aware of that. The way you spot that is by reading your session wraps. Read your session summaries so that you can see any unexpected event that took place in a previous session. Now, the key area here is Euro flash estimates for Friday. Now, what we want to see here, Mario Draghi has been mentioning that basically if inflation continues to be soft, then the ECB are essentially going to cut interest rates. So the market is starting to price in an interest rate cut for September for the ECB, and this inflation data is going to be important. So if the inflation data is soft again, if it's a poor inflationary reading, then we're going to see some weakness in the inflation in the euro furthermore. So just to be aware of that. Obviously, we've seen some euro strength against the US dollar because we've seen US dollar selling. Now, with the Federal Reserve taking a dovish tilt, the expectation is now that other central banks will turn dovish as well. So that's why this US dollar selling may not last in relation to other central banks. So all eyes are on other central banks now. So be aware of that. So this strong US dollar selling we've seen, it may reverse. Not that it's kind of reversing, but that other central banks are tilting to a dovish aspect as well. So for example, look at the Reserve Bank of New Zealand. They suddenly have a stronger New Zealand dollar because the US dollar has been sold. So that in itself may prompt the RBNZ to cut interest rates to lower the New Zealand dollar US dollar exchange rate. So be aware that this is a dynamic market and its pieces are constantly changing. But for Friday, the flash estimate, that's key, okay? Similarly, key data out of the US is the core PCE. That is the core inflation figure that the Federal Reserve prefers. If we see further weakness in the core PCE level, then we're going to see further US dollar selling. Okay, that will confirm the US dollar selling position. So make sure, don't miss that data point. It will be crucial. We also have some Canadian dollar GDP data. Now, the Canadian dollar has been doing pretty well recently because there's been some good GDP data as well as some good inflation data. So, you know, there is a sense in which the Canadian dollar could, the Bank of Canada has no longer has its kind of hawkish rate hiking cycle in mind. It's moved more neutral, but the data's been pretty good. So you could see a divergence between the Bank of Canada and the US Federal Reserve. So that's something to be aware of, okay? So Canadian dollar GDP, one to look at. If we see another strong GDP data and we see continued weak US dollar, then we can see that US dollar, Canadian dollar shorts make sense because you've got a divergence between the two central banks. So what we're always looking for, we're looking for a divergence between different banks, different monetary policy. So you've got to keep all these in mind, and each day just jot down what's the strong currency, what's the weak currency, and try and pair a strong currency against a weak currency for your intraday trading. That's what you're trying to do. Okay, you're trying to do that on a daily basis. The other thing on Friday is the Bank of Japan. We have some meeting minutes coming out of the Bank of Japan, the summary of opinions here. Okay, now those summary of opinions will be really useful to read because the Bank of Japan, they didn't join the Federal Reserve and the ECB in opening the door for policy easing, but basically last week the Fed and the ECB did. But the summary of opinions is going to be published on Friday, and that could reveal whether the board members discussed all about expanding the Bank of Japan's already large stimulus program. So the bank is going to be more likely to wait until October to see what the impact of the planned sales tax hike will be before taking any action. But a strong yen could prompt policymakers to act sooner. And we've seen the yen strengthening against the euro and the dollar. And that's been obviously with the euro and the US dollar moving towards an easing bias. Okay, if the yen keeps on strengthening, that could become a drag on growth and inflation. So the summary of opinions will be worth reading to see if the Bank of Japan mentioned anything about opening a door for more policy easing, maybe what criteria they're looking for. Maybe they would have said something like, well, you know, if we see a Fed rate cut or an ECB rate cut, then we might have to consider moving. That's kind of clues that we want to look at so we can try and see. Yeah, hi, John. Good to see you. It's good to have some guys from... Yeah, this is recorded and placed on the website so we can look at it again and do have a look at this again so you can pick up some of these finer points. Obviously, Eurozone inflation has been soft and weakening. That's the big concern out of the Eurozone. And so that's it, guys. That's the stuff that we've got to look ahead. Now, we've got a lot of things, you see. We don't need to go chasing trades. We can wait for the trades to come to us. And by looking at the week ahead, we can see the potential movements and deviations that we're looking for, including a rate statement that, you know, a rate hike, a rate statement from the RBNZ that could be a cut. And obviously a surprise rate cut is a high conviction opportunity for trading. So that's what we look out for. Don't forget that HYCM have an offer here. If you need some help with your trading, if you deposit $1,500, you get a 1-hour coaching session with me. $3,000, you get a 1-hour coaching session with me and a 1-hour trading follow-up review. And $10,000, you get 2 hours with me, 1-hour follow-up, 1-week VIP support, which is basically email contact on, you know, trade you're looking at taking and comments. Now, remember, this is not how much you pay for the coaching. This is just your money. So this is $1,500 of your money that you deposit to the account. You get this time with me. $3,000 deposit to the account and you get this time with me. $10,000 you get this time with me. So it's, you know, it's a really good deal, and it's just a way of HYCM encouraging you know, people to grow in their trading and help them grow in the trading as well as helping the business. So it's kind of like a win-win. And people who've done this with me do benefit from it. They have some focused time on what their particular issue or particular difficulty is. Okay, guys, don't forget tomorrow we have a webinar, 1 o'clock, 2 o'clock GMT. We'll have a workshop, and we'll be looking at some more different market analysis of tomorrow's session to see how we go about pairing up a weak currency with a strong currency, try to look at it a little bit more practically, and I'll have a think about how to make it a little bit more practical so that folks can benefit more from it. Thank you very much for listening. I hope you have a really good week. Look out for those things that I've mentioned, and I hope to see some of you tomorrow. Great to be back on doing the webinar. Good to see you, Nadir, again, and Sammy, and thanks for Alifemi. Yeah, you came in a little bit later. Hadn't seen you earlier. Good to see you again, and John and Salman. That's great to have some guys from Dubai here as well. And I look forward to speaking to you, some of you, tomorrow. Don't forget, it is recorded. You can look at it again. Okay, guys, that's great. Have a really good week, and hope to be in touch soon. Thanks now. Goodbye.